there is no realized loss. It was all unrealized. But if you sold at the time when the asset price was lower, then that's a realized loss because you sold. Only dummies sell too early, you know? Later, Garza, I'm going to play some bass. Hey, get that bass, Donaldson. But just remember, that just because something is lower in value doesn't mean that if you sell, you lose your money. Only idiots sell. If you are holding something valuable and you sell it for money at an unrealized loss to a realized loss, that's dumb. That's dumb money moves. That's broke people moves. Yeah. But I'm very happy and very comfortable betting against Bitcoin because, well, Bitcoin, people should feel uncomfortable buying at this price, is what I'm trying to say. That anybody buying at this current price should feel very uneasy. Because if you're buying any form of Bitcoin at the price it's at $111,289, you're really risking some biscuit there. That's wild though, man. See, look at that. Right when I was buying the S-Bit at lower prices. Now S-Bit's going right back up because Bitcoin cannot last like this. Look, Bitcoin may go on another bull run here. You know, anything that's stupid can still go up if there's enough stupid people to keep it pumping. I guess I'll read a book to you guys. I'll read off where I'm at last. By the way, this book right here is written by a guy who is not a Bitcoin believer at all. In fact, he thinks that Bitcoin is just as much of a Ponzi scheme as I do. He might be more against Bitcoin than I am. But I don't think he bets against it the way that I do. So you got to bet against. I like to bet against it at least. Anyway. I'm going to read some passages from this, but they can be a profitable investment if you buy when the fund shares are selling at a discount to the portfolio value, and when and if the fund price converges with the net asset value, which may happen naturally or in accordance with the terms of the fund charter. If you decide to go the CEF route, buy when the portfolio represents a discount. Make sure you know what the portfolio holds. You may think you're buying foreign stocks, but then learn the portfolio has a preponderance of domestic stocks, and find out under what conditions the portfolio and fund share values are reconciled. Okay. Anyway, it uses big words I don't understand. And fund share values are reconciled. Example would be some convert to open-end mutual funds at specified dates. The better option, as I explained in Chapter 8, I use a top-down approach to stock selection. This means that I decide first what regions, what countries, and what sectors represent the best economic backdrop for investment at this time. A safe, high-yielding stock that is bought and held meets... a safe, high-yielding stock that is bought and held meets any investor's objective, whether they be aggressive or more conservative, provided they understand the risks and have appropriate time horizons. So how do you choose individual stocks? My investment strategy keeps it very simple. I am looking for safety and for good yield. My reasoning is that a safe, high-yielding stock that is bought and held meets any investor's objectives, whether they be aggressive or more conservative, provided they understand the risks and have appropriate time horizons. As I am also looking to maximize returns while minimizing transaction costs. I buy common stocks through foreign exchanges. Let's see. This also gets the benefit of yields. With inflation protection and enhanced by profits on currency exchange. Companies engage directly in the production of raw materials, particularly when they are close to the source, can be both safe and high yielding and offer growth potential as well. But any conservative stocks, such as utilities, investments, and real estate in the form of commercial property trusts, are among the safest and high yielding. They are good bets if they are located in an economy that is strong and growing because it is resource rich. Beware of pink sheets. Buying individual stocks on foreign exchanges is, for my money, the best way to go. However, it requires working either through a broker abroad, which often means multiple brokerage accounts and even face-to-face meetings, or through domestic brokers who can trade directly on foreign exchanges. Odd as it may seem, even the largest brokers sometimes decide that brokering foreign stocks on foreign exchanges doesn't make economic sense for them, which doesn't necessarily mean they'll refuse your business. What they'll often do is process your order using pink sheets, which are a trap waiting for foreign stock investors unaware of them.